Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. The market is going to be parsing more Bernanke comments this week. Will those comments bring more tension to the market, or will they keep stocks flying higher? Well, let's see if our panel members can shed a little light on that. Stock strategists Tracy Reinick and Todd Bunton and our ETF research director, Nina Mishra, joined me this time around. So, Tracy, I heard one economist, in fact, I think I told all of you, I heard one economist refer to the Bernanke twins last week. So the bad Bernanke twin made his remarks in May when the market was put into an uproar. The good Bernanke twin made his remarks last Wednesday when the markets got calmed down. So what do you think is going to happen this week with that semi-annual House and Senate testimony on the economy that he's going to give?
Well, I think they're clearly stepping back. They floated the idea that they're going to taper. They wanted to put it out there. They got this, crazed reaction from the market, but it wasn't even that crazed. And then they panicked, and immediately the rest of the Fed officials were stepping it back. And now we have Bernanke himself stepping it back. Right. It reminds me of kind of when you're in the supermarket checkout line and you have a toddler and they want the candy. And then they start having like the fit in the line. All the other people are looking at you. Do you give in? Yeah. Some don't, some do. Right. But in this case, Ben Bernanke said, can't deal with the screaming toddler, I'm going to give in. Yeah. And I think that's going to continue this week because they just saw this reaction from, stocks that they didn't like, even though, again, it was only about 5% pullback. And they're going to at least stay the course maybe a little longer than they were anticipating. So did the market then misconstrue the Bernanke remarks? No. No, but they're focusing on these remarks that he said last week about, we're there to backstop it all if, things don't meet our targets, and don't worry, and that kind of stuff. So he kept intact, the possibility that we could have the taper, but the rest of his comments and the rest of the Federal Reserve officials' comments are indicating that it's going to be a while longer. So you still think this rally is a knee-jerk reaction to everything Bernanke? Oh, yeah. Yeah. I mean, it's definitely anything the Fed officials are saying is spurring it. And if we think we're going to continue to get, Wall Street, going to continue to get the QE for longer than we thought, that's a good thing for the rally. All right. Speaking of Fed officials, Todd, we've seen some deep division among those Fed officials as far as who's in favor of tapering, who's in favor of not tapering. Right. What tone do you think Bernanke's comments are going to take this week?
I think, like Tracy said, he's going to be more accommodative and talk about continuing monetary stimulus until the labor market improves. That was actually one of the metrics he talked about. He said, the headline unemployment rate of 7.6%, said that doesn't really shed light on how weak the labor market really is. And if you take a look, U6 unemployment, which factors in part-time employees who want to work full-time and discouraged workers who have given up looking, if you factor those in, then that rate actually rose 0.5% in the latest jobs report. So the labor market is still weak, and I think Bernanke sees that. It's not just that headline unemployment figure he's looking at. And so he's going to be taking a softer approach? I think so, absolutely. Okay. So Nina, earnings reports are also kind of like stepping up this week. We're starting to move into the thick of earnings season. Right. Is that going to take some of the tension off of Bernanke, you think? It's going to take some of the attention away and cause the market to shift in a different direction? So maybe the market won't be paying as close attention to Bernanke?
Actually, it is an important week for earnings. 75 companies are reporting this week, and some of them very important ones. But unfortunately, from what we have seen in the past, probably the market is going to focus more on what Bernanke is going to say on Wednesday. And less on earnings. And as far as earnings are concerned, I think many companies will meet expectations because expectations for this quarter are so low, but they'll be focusing on management guidance, which will probably bring down the estimates for the second half of this year. And nobody will care. Right? Yeah, nobody will care. They'll focus on what Bernanke has to say. And as Todd mentioned, that he is currently focused on the unemployment rate. He stated that unemployment rate understates the weakness in the labor market. So I agree with Tracy and Todd that tapering is probably not coming anytime soon.
So plus inflation is low, and that
inflation
gives
is very
him
low.
Kind of an open door to continue with it. So
I'm having a hard time figuring out, has the market and market participants, has everybody gotten their head around this QE tapering thing finally?
No. But
They
as long as
haven't.
it continues on, they don't care. The longer, the better. And, based on what we think might happen with earnings, we had a big warning from UPS on Friday. But the market actually kind of likes that. I mean, it initially sold off, but then it didn't because, that kind of warning might mean more QE.
Right.
So they like it.
Yeah, perverse
That's
way.
the thing we've been seeing over the last couple of months. If the economy is good, great. If it's not so good, great too, because then the QE continues.
Okay, what's your take on the latest GDP figures out of China as far as its impact on the global market situation?
Well, I've been watching this, as you know, Terry. I like the China story. It's like my little pet project. But it was interesting. If you delve into the numbers, it's not as good as even what they want it to be. Whether or not you believe it's the 7.5 or not. They had their finance minister, who's in Washington, well, he was last week, meeting with other finance officials, and he talked about a 7% guidance for the year when it has been at 7.5. So, and then they quickly stepped that back. Oh no, you misinterpreted him. He really means 7.5. So that's a little dubious, but this 7.5, and if we even saw 7, would be among the lowest GDP other than the recession years in like 20 years. It's not, anything under 8 is not good. So, and if you actually are believing the numbers, and if you delve into it more, it was like 5.9% of the 7.5 was an investment. They're trying to get away from investment. Only 2% was actual consumption, which is the area they're trying to build. This aren't good indicators. But the markets, again, oh, that's bad news, so we like it. They may stimulate.
Yes.
Everybody's talking about China stimulating. And then what if it trickles on over here? Or, it's again another one of those, the bad news is good.
So you're saying it's not, even though it's not good, it's not enough to send shockwaves through the global markets?
No.
No.
Yeah, I'd agree with that. It's all focused on the Fed right now.
Right.
Okay. Well, there you have it. Our latest take on Bernanke and company, and more comments coming from him this week. And we'll be parsing those comments, at least these folks will, and hopefully bring you an update on them later in the week. And as far as top stock picks are concerned, well, we didn't plan on leaving those out. They're in our next segment that you can click over to now.